Are you tired of living paycheck to paycheck, constantly worrying about the looming threat of poverty? What if I told you there's a way to break free from this cycle and pave your path to lasting financial freedom? Welcome to our channel, where we're embarking on an exciting journey through the world of cryptocurrency, unlocking the secrets to financial stability and empowerment. In this video, we'll explore the strategies and insights that can help you achieve financial security and never be poor again. From understanding market cycles to leveraging market downturns, we'll dive into the world of cryptocurrency and provide you with the tools you need to take control of your financial future. So, let's get started and discover how you can unlock the door to lasting financial stability. Disclaimer: the information provided here is for educational purposes only and is not intended as financial advice. Please consult with a financial advisor before making any investment decisions. Understanding market cycles. In the exciting world of cryptocurrency, where understanding market cycles could be your ticket to smarter investments and a more secure financial future, let's break down the essentials of cryptocurrency markets and uncover how you can leverage these cycles to your advantage. Cryptocurrency markets are renowned for their volatility, which can intimidate the uninitiated. However, this very characteristic opens doors to unique investment opportunities. At the core of these markets are market cycles, periods during which prices move from lows to highs and then back again. These cycles aren't just random, they are influenced by various economic factors, investor behavior, and global events, creating patterns that, if understood, can be quite beneficial to investors. A crucial aspect of these cycles is the halving period. Occurring approximately every 4 years, halving cuts the reward for mining new blocks in half, thereby reducing the rate at which new bitcoins are generated. This event has historically been a precursor to significant price increases due to the reduced supply of new coins entering the market, which can heighten demand. Let's talk about an exhilarating phase in the crypto markets known as the banana zone. Picture a market cycle as a roller coaster ride. The banana zone is that thrilling moment when the ride starts accelerating rapidly after a slow climb. In cryptocurrency terms, this phase often follows the halving period and marks a period of sharp, accelerated growth. Why does this matter to investors? The banana zone presents a golden window of opportunity. During this phase, the value of cryptocurrencies can skyrocket, creating the potential for significant returns on investment. Understanding when these phases might occur allows investors to buy in at lower prices and sell at the peak, capitalizing on the rapid growth. Strategies to never be poor again. Cryptocurrency markets are notoriously unpredictable. During market sell-offs, while many panic, seasoned investors see golden opportunities. Take Raoul Pal, a well-respected voice in the crypto world. He views these downturns as prime times to buy. Why? Because historical patterns show that what goes down in the crypto market often comes up even stronger. Following the strategies of experts like Pal can provide valuable insights into when might be a good time to invest. Apart from Pal, there are others like Arthur Hayes, former CEO of a major Bitcoin exchange, who has navigated through numerous cycles and suggests a steady hand during turbulent times. These experts have one thing in common: they don't react hastily to market fluctuations. Instead, they respond with calculated strategies based on extensive experience and a deep understanding of market mechanics. For anyone entering the crypto markets, developing patience is more than a virtue, it's a necessity. The nature of these markets demands not just quick reactions, but thoughtful responses. Patience allows you to observe the cycles, understand the trends, and make decisions that are not clouded by the heat of the moment. Sticking to major cryptocurrencies like Bitcoin or Ethereum can often be a safer bet for new investors. These well-established coins generally have more stability than the myriad of newer, smaller tokens, famously known as Deegan tokens. While the smaller tokens can promise high rewards, they also carry a higher risk of loss. It's crucial to understand that high rewards come with high risks. Balancing your portfolio, investing predominantly in major tokens, and only allocating a small portion to high-risk tokens can be a prudent strategy to manage risk effectively. Leveraging market downturns. In the cryptocurrency market, downturns are as inevitable as the tides. Understanding how to leverage market downturns can set you apart from those who merely survive the storms to those who thrive in them. Here's a look at how you can use historical downturns and smart strategies to your advantage. The crypto market is a showcase of resilience. Time and again, it has demonstrated strong recoveries following significant downturns. For instance, after the 2018 crash, where Bitcoin lost over 80% of its value, it not only recovered, but reached new heights in subsequent years. This pattern repeats. A sharp decline often precedes record-breaking highs. This historical trend supports a bold but calculated move known as buying the dip. When prices drop, buying at a lower price can set you up for substantial gains when the market rebounds. It's a strategy that, while carrying its risks, is historically grounded in substantial rewards. Navigating a market downturn effectively requires more than just the courage to buy low. It calls for a well-thought-out strategy to manage your investments. Diversification. Don't put all your eggs in one basket. Spread your investments across various assets. While some sectors may experience a downturn, others might not be as affected or could even increase in value, balancing your risk. Reserve liquidity. Always have some liquidity at hand. This means keeping a portion of your investments in cash or cash equivalents. Liquidity ensures that you have the financial flexibility to buy more assets when prices are low, without the need to sell other investments hastily at a loss. Avoid panic selling. One of the most common mistakes during market lows is selling out of fear. Emotional reactions can lead to poor financial decisions. It's crucial to look at the bigger picture. Historical data shows that markets have cycles. They go down, but they also go up. Sticking to a well-planned strategy rather than reacting to short-term fluctuations is key to maintaining a healthy portfolio. By understanding the history of market downturns and adopting a disciplined approach to investment during these periods, you can not only safeguard your assets, but also position yourself for potential gains. Remember, in the world of cryptocurrency, patience and strategy are your best allies. Planning for future bull markets. As we ride the waves of the cryptocurrency market, it's essential to gear up for future bull runs. Knowing when and how to prepare can make the difference between good and great returns. Here's how you can position yourself to capitalize on the next surge in market values. One of the best strategies to prepare for a bull market is staying informed. Platforms like Bitcoin Zella serve as crucial resources, providing up-to-date analyses and news. These platforms dissect complex market behaviors into understandable insights, helping you make informed decisions. Moreover, the importance of community in the crypto world cannot be overstated. Engaging with other investors and participating in discussions on forums can provide diverse perspectives and real-time reactions to unfolding events. This communal knowledge pool is invaluable for spotting the early signs of a bull run. Liquidity refers to how easily assets can be bought or sold in the market without affecting their price. In cryptocurrency, liquidity is vital because it determines how quickly you can react to market changes. High liquidity means easier transactions, which is crucial during both the onset of a bull run and when taking profits at its peak. Recent trends show that macroeconomic factors, such as Federal Reserve policies, significantly influence market liquidity. For instance, if the Fed decides to pump more money into the economy, we often see an increase in market liquidity, which can trigger a bull market. Being aware of such trends can help you anticipate changes in market conditions and adjust your strategies accordingly. By keeping well informed through reliable sources and understanding the crucial role of liquidity, you can better prepare for and benefit from upcoming bull markets. Remember, in the dynamic world of crypto, knowledge and readiness are your best assets. As we wrap up our exploration of navigating the twists and turns of the cryptocurrency market, the power lies in making informed decisions. By understanding the complexities of market cycles and strategies, you're not just investing in cryptocurrency, you're investing in your financial empowerment. We hope this guide has illuminated paths you can take toward not just surviving, but thriving financially. For continuous updates and deeper insights into the world of cryptocurrency, don't forget to subscribe. Your journey to financial empowerment is just beginning, and staying informed is key. Moreover, we want to hear from you. In the comments below, share your strategies, successes, or lessons learned from investing in cryptocurrency. Your experiences not only enrich your journey, but can also guide and inspire others in this community. Disclaimer: this channel does not provide financial advice, and anything that is said on this YouTube channel should not be seen as financial advice. These are biased opinions based on knowledge and personal experience. You should always understand that with investing there is always risk, and do your own research before making any investments.